As China warns about a serious slowdown in its economic growth, the US says Beijing poses a greater threat to the world order and its economy than Russia's invasion of Ukraine. Business editor Ross Greenwood joins us this morning. Ross, good morning to you. So what do you sense is the motive behind Antony Blinken's words here?
So Antony Blinken apparently has been formulating with the US government this speech for quite some time, where he lays it out firmly at the feet of the Chinese Communist Party that really it is the significant threat to the world order in terms of politics, in terms of geopolitical strength, and even in terms of economic strength. He doesn't say that there will be a future Cold War. Indeed, he says that what will happen is the United States and other allies, similar to the allies who have actually sort of rallied against Russia in its invasion of Ukraine, will come to compete against China to really again exert power, economic power around the world. But as you point out, this comes at exactly the same time that you've had a situation where China, its economy is slowing as a result of those very harsh lockdowns. But let's first up go to Antony Blinken making this speech last night talking about China.
We will invest in the foundations of our strength here at home, our competitiveness, our innovation, our democracy. We will align our efforts with our network of allies and partners, acting with common purpose and in common cause. And harnessing these two key assets, we'll compete with China to defend our interests and build our vision for the future.
Yeah, but the timing of this speech is also interesting because of what's happening inside China itself. In the last couple of days, it's been Keqiang, who is the Premier of China, who we can see here, who has made speeches about the downturn in China's economic growth. And certainly it's not been Xi Jinping. And there have been reports in Reuters, in Bloomberg and other places that there is tension between the two Chinese leaders about the approach to the economy and the way in which it's growing. Previously, China had said it would grow its economic growth around 5.5% this year. Now it's going to be significantly slower than that, and that is also seen to be an embarrassment to the Chinese leadership, which is generally pretty good on its promises about economic growth, mainly because, of course, they have significant control over that economy.
Yeah, well, meanwhile, this is our top story this morning, Ross. Consumers and businesses face higher electricity prices, cost of living only going to get worse, but that's not the end of it. There's a warning today from one of the world's biggest steel makers.
Yeah, indeed it is. And those power prices significant. Of course, we broke here on Sky News yesterday when those power price increases came out. But the other problem, of course, is to make many of the other things you require. You need power to make steel. So Nippon Steel, we can see here in Japan, has said today that its prices are going to rise. Now, that then directly goes into the price of cars. It goes into the price of all sorts of white goods. It goes pretty much everywhere. This is the world's third largest steel maker. And so the pressures that come on, not just for the price of coal, for the price of iron ore, but for the price of electricity is key when it comes to the price of consumer goods. This is adding to inflation. This is adding to the pressure for interest rates to rise, not just in other parts of the world, but right here in Australia as well.
Back in Australia, Ross, one of Australia's tech darlings has seen its shares rise 30% with a takeover approach, only to see it evaporate hours later.
So it's a pretty weird story, this one. So one of Australia's, tech darlings, as you call it, is a company called Appen, which does data. It's an IT services company. So the famous stocks here are the WAX stocks. So that's Afterpay, Appen, WiseTech and Xero. It's one of them. Its share price has boomed and now has fallen apart. It gets a takeover bid from the United States, a company called TELUS. And basically what happens is it looks like it's great. The share price goes gangbusters, up by 30%. Then the shares are suspended. Now it appears as though the Canadian company has pulled out of the deal, literally only hours after it was announced. So as I say, very strange, but you're going to find interesting takeovers here with the Australian dollar being so low and some of these prices having gone so low for these tech companies. It will not be the last of the takeovers we see.
OK. Stock market today, anything to look out for, Ross?
Yes, there is. Retail sales come out. So last month, which was in March, there were record retail sales in Australia, the best month ever. You're going to expect to see exactly the same thing for the April month when they're released today. They're tipped to be up by 0.9%. The March sales were up by 1.6%. But all of that, and the US markets being very strong overnight, the Dow Jones picked up on the back of suggestions that interest rate rises might not be as vigorous as first thought. And as a result, our stock stock market on the opening today will be up by around 1%, Pete.
Oh, I like that. All right, Ross, thank you. We'll talk to you soon.